Hello and welcome to Fintech Insider Insights. I'm Kate Moody, Strategy Director here at LMFS. In this episode, we'll be exploring how community banks can win on the banking battlefield. It might seem at first that these small to mid-tier banks serving only a certain region or niche of customers might have the odds against them. And yet community banks are often uniquely positioned to serve their customers in ways the bigger banks can't, won't, or don't. We're going to dig into all of this to try and put together a guide to community banks everywhere on how to get the edge. Firstly, joining me today is Jason Bates, co-founder and deputy CEO at LMFS. How are you doing, Jason? Thanks for joining us. Are you a passionate community mid-tier bank advocate at heart?
Who doesn't love a good David versus Goliath story? Of course I am.
Yeah. And we're also delighted to welcome back Rohit Mathur, CEO at Bridge. Welcome back to the podcast, Rohit. For those who don't know you, please tell us a bit about who you are and what you're working on, please.
Sure. Good to be back on and good to see you again, Kate. I'm the CEO of Bridge, which is a platform that connects small and medium-sized businesses with over 75 lenders, a majority of which are actually community banks. We started the platform about 3 years ago, and now that we are no longer part of Citi, I can say with Kate's help and 11FS's help to launch that platform. It was launched within Citibank as part of their accelerator incubator program, and we're now spun out as our own entity, VC backed, with various investors, including Citi and other larger banks. But the thesis of our platform from the beginning has been how to help digitize the loan process, both for small and medium business owners, but then how to connect them to community and regional banks or other lending institutions that are best for them. So we're a two-sided marketplace, and we care passionately about community banks.
Yeah, absolutely. And yeah, always excited to see what you guys are up to. So looking forward to picking your brains again today, as always. And finally, we're also joined by Barb McLean, SVP, Head of Technology Operations and Implementation at Coastal Community Bank. Barb, always an absolute privilege, pleasure to have you on the show. What are you up to at Coastal Community Bank?
Thanks, Kate. And so happy to be back. We're up to a lot of fun things. It's really great to be involved in an organization that's so supportive of how a community bank needs to transform itself to be relevant. And so that's what the team and I are up to.
Absolutely. And yeah, massive fan of Kurt as well, and the kind of leadership that he's bringing to the sector as well. So excited to hear what you guys are up to as we go through the discussion. So let's dive in. Barb, maybe you could start us off from bearing in mind that our listeners kind of are fairly broad. Some people might never have come across the concept of community bank before. Like, what makes a community bank a community bank?
Well, the concept might be familiar with different wording wrapped around it. Some people might know it as a credit union or a cooperative or something like that. And the idea is a group of people that are getting together to help facilitate financial services for their community. Now, community has traditionally been wrapped around the idea of geography there, most certainly. The credit union movement in Canada has been like that, and obviously that's where a lot of my history and experience came from. Community banking and credit unions in the United States are very much like that. And I think those, focus on that group of people or focus on that geography and upholding those cooperative values, if that's sort of the place where it's brought you from, that would resonate with, I think, a whole bunch of people, no matter where they are, listening to us from. And, the community bank, sometimes even roots itself in the way it names itself. A lot of the community banks and credit unions will actually name themselves after the town where they started. And I think sometimes that legacy starts to hold them back because community doesn't just mean my local geography anymore. Community can many times mean I have an affinity with people that are interested in the same kind of activities as me. I have an affinity for people that maybe actually came from a different geography and now we all live in different places, but we're rooted in that history together. So I think that change actually can be really difficult for people when your entire brand is potentially wrapped around a locality or the place where you started.
That's an awesome overview. Thank you so much. I mean, Rohit, you mentioned that a lot of your partners are community banks. Does that align with the kind of picture that Barb painted? What kind of nuances do you see to this sector?
Yeah, absolutely right. I think it does align. I think just from a numbers perspective, right? there's 4,300, 4,500 banks in the US, right? Over 4,000 banks. 30 or 35 of them are what are classified as kind of large national banks based on the total assets they have, which is over $100 billion, right? There's probably another 130 that are in that 10 to $100 billion range. But then the overwhelming majority of banks in the US are really what, I think the Federal Reserve classifies as a community bank, which is less than $10 billion in assets. And to what, Jason started with, right? It's like a lot of Davids versus Goliath. But from a size perspective, it is kind of a David versus Goliath. And to just echo what Barb said, I think the last time we were on this podcast too, I remember saying, look, I think communities have changed and community banks now have to change with them, right? Main Street isn't what it used to be. Main Street a lot of times doesn't exist anymore. It's like someone running billions of dollars of business over a computer. And so community banks obviously have faced this kind of point of reckoning over the last 5 or 10 years with digitization, with the entrance of sort of online and digital lenders, and candidly with the kind of rapid investment that the large banks have made into technology, right? The Citis, JPs, Wells, Bank of Americas, and others have spent $10+ billion on technology every year. So while community banks were always kind of in a huge kind of battle with those big banks, but the big banks used to hire hundreds of thousands of people. Now they're spending billions in technology, and so the community banks are kind of competing on that front.
Jason, what advantages do these banks have then against that rather bleak picture maybe that Rohit described of all that investment? How do community banks compete?
With difficulty, I think, and everyone would agree with that, because it's a little like the traditional the battle for the high street. Ultimately, people had retailers and they were local and they knew you, and you went down to the shops. Amazon and big technology-driven retailers arrive, and suddenly people are thinking, well, I get a better price, or I get a better product from somewhere else, not my local community. But when you look at the high street and you say, well, who is still there? Who's still on Main Street in the US? Who's succeeding? It is people, or it's shops and indeed community banks that have a level of differentiation. If you offer what the big boys do, but just at a smaller scale, you're going to have difficulty with economies of scale, because the big boys will outprice you. And what are you giving in return? So I think for community banks, and I like how Barb started from the community rather than arguably the traditional way of talking about community banks, which is just they're small banks. And that's the way to win. Really, in some way, you have to have some level of service differentiation connected to some kind of niche or community. That means you can focus. It isn't one product for everyone. The 4 banks with more than a couple of trillion in assets in the US can deal with that. You've actually got to now focus on something that's a little smaller, more focused.
Yeah, Barb, I mean, what I've seen from my conversations is, there are definitely operational advantages to being smaller. Can you talk to that for us? Like, what are the kind of benefits maybe that a smaller organization might have?
I think it should be the ability to make decisions quickly and be nimble. That should be what we all think about when we think small. But I'm not sure that the decision-making muscle to do that is there yet. I see a lot of doing it the same way that we always have. And there's a recurring theme as I look across, these 2 different countries that I've now had the opportunity to work in, Canada and the US, in my career. And there's this one thing that keeps coming up, has this new breed of leaders within these organizations who think differently and therefore want their banks to act differently in service of customers? Are they really being unleashed? And I'm not sure that sort of turnover of thinking has actually happened yet within those organizations.
Okay. Rohit, what's your experience?
Yeah, I couldn't agree more with what Barb said. Right? It's so true that, in theory, it should be more nimble. They should be faster. They can change path faster, right? So as they see things in the market, and as the market's moving, they should be able to move with it. I also agree with her that I don't know if that's happened yet. The other thing I would sort of say for that's kind of going for community banks, because I continue to remain a huge believer in community banks, right? I think what's going for your community banks is that I think borrowers, clients, small and medium sized businesses, individuals do want some more of a kind of bespoke handheld experience. It's kind of on trend in terms of how we're drinking coffee too, right? Everyone wants small batch coffee that they feel is being kind of custom made instead of the large types of coffee. And so I think it's similar, right? I think people like the idea of, hey, I can actually have this customized experience that's catering to me. Like Barb said again, that's my community, and I'm with like-minded people, or I'm getting services that are for others like me. So I think in theory, that's what they've got going for them. I also think if you take kind of a macro view, and look, in banking, you've got to talk about regulation because that's such a huge part of banking, right? I think from a regulatory perspective, I think if you ask any regulator in the US, they would say, we want community banks to exist, right? And we want them to exist in the way that they do today, right? I think one of the reasons why the US economy is so strong is because of the kind of diverse banking sector, right? I've seen a lot of countries, I'm sure we all have, where there's kind of 5, 10, 15 banks, right? The US has 4,000 plus banks. That is one of the things that has caused this kind of economic engine. And so I think we're actually all, overall, we're having a great conversation about how to make community banks more relevant, more efficient. But I think the conversation isn't, hey, should community banks exist? They definitely should exist. They just have to be more nimble, more digital, and kind of move forward.
But I guess there's going to be a bloodbath, right? I mean,
Yeah.
4,000 banks. They succeeded because you could walk down Main Street into a branch and wave at Susan, who, was the teller you knew. And of course, people are using branches less and less. Footfall isn't there, and people are looking to digital. And so then you look at a small community bank and say, well, are you really going to be able to compete to outspend Citi, Wells Fargo on your digital estate, and what you can deliver for customers? Is the value proposition still there?
Well, I think the industry players that support those community banks are not helping that story. So many are completely reliant upon the vendor that they chose probably a few decades ago or more that equips them with their core banking system. And one of my colleagues says it really well. Essentially, you become a franchisee of that core vendor because as a community bank, your ability to discern and assess technology choices can be limited. It's not typically an area that there's a lot of investment in internal teams or capabilities. So you sort of just go along with what they tell you and the things that they, append or surround that core with. And that ends up being your technology estate. Those solutions have not moved in decades. And that is therefore holding that entire set of organizations back because they literally can't move forward.
Yeah, look, I think you guys make such a good point on all of those fronts, right? I think that community banks have a lot of sort of challenges inherently, but at the same time, I don't think, Jason, to your point, I don't, if the, I think someone started with this, right? If the community bank is trying to compete with Citibank and JP Morgan for the same client, for the same product, you're probably going to lose. Like, that's not what you should pick. But you're nimble and you're small, so go find the niche, because guess what? JP Morgan and Citibank aren't trying to bank everyone in the world, right? There's definitely, because they're trying to make kind of capital allocation decisions, and they're saying, okay, I can allocate technology to this type of product and this type of client. I'm going to do that. And usually, by the way, they're all doing it to the same type of client and product. And so there's a huge opportunity for community banks to really find niches, because they're also working with a smaller denominator. You don't need to kind of increase your $40 billion revenue by 4% a year for the market to kind of give you any credit. You have a much smaller revenue base. And so, by forming partnerships, by focusing on niches, you can really move the needle. And Jason, I totally agree with you. I think there definitely will be consolidation. Unfortunately, as we have seen, by the way, we were at 8,000 banks 10 or 15 years ago. We're at 4,000 now. We'll probably be lower, right? That said, there is a huge opportunity for there to be winners in the space. And to link it to something Barb said, if the right leadership team and the right mentality is at leading the helm at some of these community banks, I think you're going to see over the next 10 years, there are going to be community banks that are going to really win. Others will obviously inherently lose, but there'll be ones that'll really win. It'll be ones that kind of see that they need to kind of change tact and kind of adapt to win.
So what kind of playbook do you think they'll follow? So here's an interesting example. USAA, right? The Bank for the Armed Forces. I don't think anyone would describe them as a community bank, but arguably to Barb's definition at the start, they are almost the archetypical. They really deliver very great services to the US Armed Forces. So is that a kind of play that we're looking for?
And I would say, look, what did they do? They formed a partnership. And they formed a partnership with the US Armed Forces, right? And so they created this niche. They know their client. They go after that client relentlessly, right? Every commercial you will see for USAA on television will talk about how they are focused on the armed forces. By the way, they will bank a lot of other people as well who aren't part of the armed forces, right? But they do that. And so I think it's back to that, find your niche. And that's the playbook that seems to work, right? Find your niche, find the partnership you can find in that niche, and then try and get enough digitization to make that an efficient play.
Barb, anything to throw into the mix?
Well, I think the way that you always did it can't be your playbook. So one of the ways that coastal community where I'm at is coming after this is through completely disregarding that geography that you're started in and fixed from as a way to extend your business. And so I don't think we can probably finish this conversation without talking about what does it mean to then go purely digital. And it picks up on exactly what Rohit was talking about there, and it's the word partnership. And I think that needs to be defined. It's not just a vendor-customer relationship. It's true shared skin in the game to drive mutually beneficial outcomes. So there are an awful lot of smaller banks pursuing that kind of path and strategy where a community bank arguably is definitely not the best at crafting the end user experience. Go and partner with another organization that upholds the same values and wants to try and serve the same community of people that maybe you are troubled by serving because you're locked into that geography. So whether you call it banking as a service or you call it embedded finance, I think that's one of the playbooks that we're going to continue to see play out in an interesting way. The regulators in the US obviously have lots to say about that right now. So how do you do it well? Those are the folks that are going to win with that playbook.
So is that the school of fish approach versus the shark, or maybe piranha, we should say, where basically you can group together and actually have a bigger volume, a bigger surface area, more economies of scale that you can work together. But do community banks think like that? Are they really going to partner with someone in the next state or someone a couple of states over?
Well, I think that comes back to the mentality, right? Am I fearful of that otherism, right? I want to be truly focused on, the folks that I can see when I look across the local landscape. If I can't see them with my eyeballs, they aren't one of us. That is definitely going to hold some of those banks back if they think that way.
I think I've seen it in the one use case I have seen that happen, right? And I think inherent in your question is they need to do a way better job of it that they've done in the past. But I think one use case I have seen that happen is, of the 4,500 banks in the US, only about 18 are Black-owned banks. And they do a pretty good job with the National Bankers Association, which is kind of the trade association that represents the Black-owned banks. They've done a pretty good job over the last few years to really come out and say, look, there may be even states we're competing with each other, and there definitely are states where we're not competing with each other. But there's a couple of, there's some pretty common values here of how we can go to market, using the National Bankers Association to try and kind of drive whether that's investment or benefits for all of the Black-owned community banks, right? So I have seen it in that, at least that maybe it's not enough examples, but there's one example that I've kind of seen myself very closely, and we've got many, almost all of those Black-owned banks on our platform, where we've seen that they have realized that there is a lot of strength in numbers. And kind of combined together through that trade association to be able to get those benefits.
The community of community banks. Yeah. How many layers up are we going to go? I guess, when when we were kind of doing that initial work, Rohit, right, around kind of the platform, when we were speaking to organizations, it was really interesting to see, I suppose, the cultural dynamics between those that kind of were happy, to Barb's point, almost to kind of really focus on just what are they good at, like the products they can service, just having access to that market to kind of get their products into customers' hands, versus the organizations that want to really retain those relationships, own that point of engagement. How is that, as you've kind of built the platform out, like how have you kind of seen that evolve? Like what is that kind of relationship that organizations using Bridge want to have with their customers?
Yeah, look, I think a fundamental to a community bank is that they want to know their customer. And part of that, by the way, is economic as well, right? Where they say they want to know their customer, they want all of the products, the financial products that customer has. Unlike a large bank, if you go call JP Morgan and you say, hey, I want to do my IPO with you, but I don't do anything else with you, I think they'll say, absolutely, we'll be right over, right? Because that product in itself can make you a lot of money. And so, of course, they'll do that for you, right? Versus if you call a community bank and you say, hey, can you just do my loan? And I really don't want to do anything else with you. They'll say, no, thanks. Like, we'd also like your deposits because, a loan might be a loss leader for us and we need to get the deposit. So I think that relationship aspect of a community bank is super important. I think where I've seen more evolution is how do you get to that relationship? Right. I think community banks realize you can't just focus on the relationships you've had over the last 20, 30, 40 years. Right. There's a lot of new businesses coming into the fray or new individuals who want a bank coming into the fray. And how do you make that initial relationship, which is what our value proposition is, right? We say, look, we're not saying lend and then don't talk to the borrower. We're saying talk to the borrower, do all of their other products and services, but let us help you find that borrower, because the way that you were finding that borrower 20 years ago or 15 years ago may be very different than the way you can find that borrower today. And we found a lot of adoption of that. The second point I'll make is that, many banks in the US, community banks especially, have spent the last, two big things have happened, right? One, they spent the last many, many, many years focusing on commercial real estate. If anyone reads a newspaper in the US, you'll see how all of them are being told that commercial real estate is in this huge kind of spiral, right? And look, I don't want to opine on whether that's true or not true, right? But I think we've seen from a lot of community banks who have focused just on commercial real estate. They've said, wait a second, I actually now need a C&I business as well. Can you help me with that, right? So we say, yes, absolutely. We've got a bunch of suppliers from Walmart, Best Buy, Dollar General, who have what have you, who can kind of help with that, right? And by the way, if you need commercial real estate, we can help you with that too, because we've got built-in partnerships. But that's kind of one. The second thing I think we've seen, and you probably saw this firsthand when you were working together, was COVID has changed so much, right? The community banks kind of ethos used to be, I am going to go meet this person in their office and say hello. And while that has come back, I think what COVID did was people learned that there's a thing called Zoom, there's a thing called Teams, and there's various other kind of platforms where you can actually have those first 3 or 4 discussions and use your time more efficiently, right? Which is have those first couple of discussions, and if it makes sense, then sure, go meet the person, look at the factory tour or whatever, but at least kind of do that screening in a more digital way, right? And in this case, I'm saying digital as just using Zoom.
Do you think that complete share of wallet pursuit is really realistic, though? Have we not all just trained ourselves to download a new app to give me a new thing, and I'm just going to discard the old one and leave it hanging there? I'm not sure that that's really a realistic outcome to seek for all of your customers. I think it comes back to being very focused in the things that you do well. It can't be all the things, right? You can't play the same game that Jamie Dimon is playing if you're a community bank. That's obvious. You can't outspend him, ever. So how do you take those scarce resources and focus them on the set of things that you're going to choose to do well for your customers, and be realistic with both them and yourselves on, I'm just not going to do those other things. We don't play well there.
I think that's the perfect place for us to take a pause, and we'll come back and answer that question immediately after the break. Welcome back to Fintech Insider Insights, where we've been attempting to define the roles and opportunities for community banks, but we're going to dig in a bit further to think through what they might do differently and maybe what some of the challenges might be that they face along the way. So, Barb, I suppose before the break, you kind of issued a bit of a challenge. What is it that community banks need to do differently?
Well, you can't just replicate what you see the larger organizations doing. The amount that a community bank can afford to invest in technology isn't even a rounding error to a large bank. So you really have to double down and focus on how do I make that spend meaningful? It's a lesson your team taught me, I think, years ago, right? Think rich, but act poor. So how do you make the best of that spend? And so, you have to, I think, find the right ways to bring in those new leaders who could teach you to think differently about how you're going to use that money. And you do have to figure out a way to unshackle yourself with that spend from how you traditionally spent it. That existing OpEx has to go away. How are you going to make that happen? That's the trick of it.
Well, yeah, that was going to be my next question. So, yeah, how do you cast off the shackles?
So there's an engineering approach that we've taken, which is, find the seam and start to hive things off. So maybe that is a new greenfield build to serve a new community in a way that you've never served before, right? Maybe you actually see an opportunity that's underserved within either your local geography or if it's, a digital community that you're trying to serve. Greenfield build to help and serve them. Or maybe it's new capabilities that you've never been able to bring to your existing community. So find that seam and hive it off and continue to build and pursue from there.
Jason, what do you see as best starting point for community banks that are looking to try to do things differently? Where should they start?
Well, it's interesting because if I look back to the early days of Starling and Monzo, I could argue that Monzo was a community bank before it became a national bank. Because if you were one of the first 1,000 people to get a bright pink card, then you probably got it at an in-office event in the middle of London. So Monzo could arguably be described as a community bank for Old Street, for the tech area of London. And you came, you met the people who worked there. We gave you the story about the thing that we were trying to achieve. You signed up, you walked away with your card, and that built a feeling of knowing, of belonging, of connection. Because in a world of banking being very at arm's length, the fact that you probably met Tom, the CEO, and he gave you the card, and then he asked for your support in trying to build something special, was very much a community feel. So in the digital world, you might argue that in-person communities are a great starting point to do that. You might argue that a startup bank is actually, behind the curve from a community bank that has trust, it has place, it has story, it has a banking license, it has all of the elements. But ultimately, then community banks have to take lessons from that startup world of what is that beachhead? Is it a travel card? Is it agri-finance? Is it, what is it in our state or in our place that is actually something we can do, or something that connects with our story that makes this special? And I think that then you start, as Barb says, you find the seam and you mine it. You specialize. You become the best at your one thing, rather than try to drip feed your small amount of money over all of the products that you might have in the bank.
Rohit, do you see banks taking that approach?
Sometimes, I think the one trend I've seen, which I think is, which I kind of always warn banks against, is kind of jumping into a tech solution, right? I think there's a general theme of saying, hey, we have to digitize. Let's go buy this platform that will take us 7 months to implement, and then it'll take us, endless amounts of money. It's almost like the kind of, razor blade model, where they'll kind of get you on the razor blades over the next 4 years. But it seems kind of cheap to do right now. So let's go just build this technology thing because it'll answer everything, right? Not addressing the actual kind of process challenges or kind of coming up with the strategy of how to do it. One of the very conscious decisions, as we took early on, was to not build a product that had to kind of be, downloaded and implemented within that kind of server, but it's a web-based platform, right? Because we said, look, if every bank is to start kind of ingraining us within and connecting us to all their systems, they're going to spend a bunch of time and money doing this and not really get to test what we actually want them to test. And so I think I have seen, unfortunately, a lot of banks starting to think about digitization in the way of like, what should I implement? What should I buy? Whereas, my advice to them is always like, test the actual thing that you want to test, which is, hey, if I go to a business owner faster, are they more likely to bank with me? That's what you want to test. You don't want to test like, can I implement a $1 million solution well and or not well, right? And so, in order to do that first part, I'm a huge believer in kind of partnership, collaboration, and that digitization should really be a result of those two, but rather than a separate pillar of like, I'm going to digitize. Not really sure why, but I'm going to digitize anyway. But I think those first two are probably just as important.
And I think people trying to make these decisions in a different way also need to recognize the longevity of those relationships looks really different. You're used to being, lifetime monogamous with that vendor because it's impossible to switch, and their entire business model is incented to make it as hard as possible. But it's probably okay to seek out these, partner relationships that have a much more ethereal sort of timeline. They make sense for us right now, and we both are driving this shared outcome right now. That might not be the case in the future. So make sure that you have those open conversations with the organization you're seeking to work with, and actually have an exit plan for that. Okay, it's going to work with us until, or we're willing to spend this amount of money to get to this outcome because we're showing this value for our customers here. And maybe that's it. And that's okay.
But I guess, we're not at the final solution of where banking is going to be. So there has to be built into the technology, built into the organization, abstractions to be able to change, right? Because we're in this time of radical change. So, the strategy that your mum and dad, your grandparents would have used leading their businesses 20, 30, 50 years ago, have this long-term strategic plan and stick to it and efficiently deliver against it, isn't where we are now. And so whether it's technology architecture with APIs and messaging buses and microservices, or whether it's organizational setups and teams and squads, or whether it's commercial agreements with things that we can evolve and actually test and learn and develop on. It seems that we need that agility, and arguably community banks, with their size that they are, have more of that.
Yeah, they should in theory. There's one point you were making earlier, Barb, that really resonated with me, was around, you talked about everyone having the same kind of platform and things become very generic. Like, we were working with a US community bank fairly recently, and as part of that work, we looked at their immediate competitors, like other community banks, who were all using the same underlying platform. And when you looked at their offerings, they were identical. Like, no one had actually taken the time to think about the experience that you configure on top of that underlying stack. So, I mean, was that a one-off? Like, or do you see kind of consistent underinvestment in that kind of design, the experience, like actually what a customer is seeing and interacting with on a day-to-day basis?
Oh, completely consistent. That would be my expectation. Knowing nothing, all things being equal, about a smaller institution. So, the community bank, credit union space, really all of those, 4,367 that fall below the line there, Rohit, whatever that number is, I would absolutely expect it's literally cookie cutter, zero configurability. You barely have the ability to slap your brand on there, and that's the only thing that's different than the other person's app. Is that so troublesome anymore, right? Is account opening really the thing that's going to differentiate you now, or is that just a commoditized thing? And to Jason's point, you just need to give yourself enough capability to just swap it out for a new component.
And I suppose the other question that kind of came up in that piece of work that this particular organization was struggling with is, what is the role of your physical staff, like your physical branches, your staff? Again, I doubt we can kind of answer that like in the constraints of the show, but I suppose, what are your initial thoughts? Like, what strategy are you taking at Community about kind of managing kind of the people and the branches?
Well, here at Coastal, we have, two different distinct sets of communities we're trying to serve. One is the local communities that surround our 14 branches in the state of Washington. And, we care very much about how we support underprivileged students that attend the schools that are adjacent to our branches, and Yes, we absolutely have cookie drives at Christmas time. And, we want to make sure that we're contributing to the healthy culture of those communities by the fact that we do have a local physical presence there. How can that be leveraged for good in those communities? And then there's this other set of communities that have no distinct geography, and that we're actually, not serving up the end user experience because that's delivered through a partner. Because up until now, we have not traditionally been the people that build the best app, as we were just saying, right? We've consumed that technology from another organization that really doesn't care about giving us a great experience. They just wanted to sell us more stuff. And so we knew we couldn't rely on that to better serve people outside of our geography. How do we do that nationally? So there's this other completely digital community that we serve through the partners that do that. And it's them who help us understand how to serve that constituency of users best.
Jason, what's your take on the role of physical, real-world humans for community banks going forwards?
There's something extremely valuable about community and about truly understanding what it is that your clients want and need and how you actually deliver that. Does everyone have to be, based in a branch? Is it a place where you go and get a statement printed out? No, it's not. But there are other needs, and branches could look very different. They can be kiosks, they can be small, they can go to the colleges or the universities of wherever it is that you're serving customers. But ultimately, customer contact is useful and valuable. I think there were two other points sort of hidden in the conversation. One is, I think when you were asking about whether every app looks the same, I would argue that a fair few CEOs of community banks don't see that as a problem at all. Essentially, technology is just a channel for them. It's if we can get the lowest cost vendor to provide the same app as everyone else, then that's great. But I think 11FS, we've always looked to the fact that technology, as well as driving the cost down as serving customers, can deliver a 10 times better service. It can actually deliver valuable outcomes for people using context, using intelligence, making things happen. And I think that's where it gets interesting for community banks or for banks focusing on particular communities. Because to Rohit's point, it's not about what technology can we buy and let's start to implement it. It's about who are we really serving, what are their real needs, and then what technologies can we apply in order to make their lives better and easier. And so I guess then moving on to Barb's point about, we talk about services and journeys layers, and that ultimately there is a banking app layer where, you run your day-to-day finances or you look at your medium long-term financial picture and think about where you're investing. But there are also these embedded journeys, where financial services get embedded in other people's journeys, where escrow and credit and insurance and a whole host of other services belong at the point of need. And to Barb's point, you don't need a banking app there, but you do need to then integrate, partner, connect with people who are delivering those things, whether it's online realtors, whether it's real world realtors, whether it's boutique shops, whether you name it, every business that has that financial services piece in could embed financial services from a community bank.
And going back to where you started, that's the missing piece for me for community banks. It's that skill set of figuring out how to know your customer and understand them through the ones and zeros of the digital exhaust they generate in life. I'm not Susan at the teller line anymore, and I know you because you come in every Tuesday to deposit your paycheck. How do I learn to know you in a completely different way than I used to?
Yeah, that was going to be my question, right? Like, what is the missing piece of this sort of vendor landscape? Like, if someone's listening to this show with a sort of entrepreneurial hat on, thinking like, is there a business opportunity here to come in and partner with community banks? What does it look like? I mean, I guess we probably shouldn't do their Shark Tank or Dragon's Den pitch for them, right? But like, I suppose you started to articulate it, but what does that ideal vendor look like? What is it they would help you to do?
Well, it's teaching you how to navigate data this all comes down to data. It doesn't matter which layer of the stack you're operating at. If the data underneath is not consumable or locked away in a silo or doesn't combine well with something else or isn't available, to the right person at the right time in the right medium, you're never going to get there.
Rohit, I'm seeing a lot of head nodding. Any perspectives on that?
No, I agree with everything that's been said. The one thing that kind of, as people were speaking, I was thinking through, right, is that 20 years ago this wasn't true, but today community banks are fighting a two-front war, right? You were always kind of competing with the larger regionals and the big banks of the world, right? And they kind of understood what that competition meant. I think the other side, the other front, is fintechs, right? There are digital lenders, there's digital account opening. There's kind of various digital banks out there. The last thing you want to do, coming back to the last conversation we had, the last thing you want to do is kind of over-index to the other side. And instead of competing with a regional bank, now all of a sudden you're competing with a digital lender that's kind of VC backed and has a bunch of different metrics and ways that they can win versus how you can win. And you don't want to do that either. So I think to Barb's point earlier, right? You really got to know what you want to do as a community bank. You can't go this completely digital route. You can't obviously be in the, hey, I'm just going to focus on brick and mortar and not do anything digital. So it's a really tough balance. I mean, it's a really hard job to have. I wouldn't envy any community bank CEO, right? Just because they're kind of fighting a two-front war here. But I think really, community banks need to continue to think through how to partner. And to come back to one of the other points that was made, is test and learn and pilot things and try stuff. I think that is the biggest thing I've seen some banks be really good at and others really be very resistant to, right? Where there's a lot of people who just want to do what they're doing, and you kind of show them the graph that Jason was talking about. And it's like, you realize that banks have been dwindling over time, right? It's not like there's this huge story that things are growing for you guys. And so the ones who get it, I think, will win. And the ones who don't, hopefully, have a good outcome as well, but we'll probably get consolidated.
Okay. Well, we're coming, sadly, towards the end of our time. So I guess I'm going to ask you guys to put yourselves in the probably not so attractive shoes of the CEO or chief exec of one of these organizations that maybe hasn't made any of these changes yet, hasn't made a start on thinking this way. What would you tell them to do as their first step, Jason?
Wow. Look, there are virtues and assets and things that community banks have that no one else does. There's brand, there's history, there's connection, there's story. And I think you have to lean into who you are. You can't just, to Rohit's point, turn into a fintech and say, here we go. You have to really embrace the thing that made you different and made you special at the start. And then you have to look to your customers and what is it that you can deliver to them that other people can't? What's your superpower? What are you amazing at? And then how do you use technology in order to start to test and learn on doing that? And I think it's some combination of those things that really leads to some really interesting opportunities.
Rohit, I'm guessing your answer is going to be like sign up to Bridge, but like parking that to one side, like what is the number one thing they should do?
Email me, call me, sign up to Bridge. Well, look, I think I would say step back first, right? Instead of trying to jump into something of like instead of going to find the solution, first identify where you want that solution to be. Step back and really understand the market and understand what is missing in that market. And if, again, I'm happy to kind of tell you what I think is missing in the market if you're a bank CEO that calls me, but understand the products that are missing, understand the partnerships that are available, and understand then kind of what you're good at or what you appeal to, and then focus on that. So I would say if I was advising a CEO of a community bank, I would say first things first, don't try and get into idea solving and kind of ideating or solving a solution. Take a step back and have a drink and try and figure out what is it that I really need to look at and where am I in the market, and then kind of pick 2, 3, 4 areas and drive into those.
Maybe quite a strong drink by the sounds of it. Barb, final word to you.
I think it's a blend of what you've both said, and is that skill set something you think you need resident in your organization? Go and get it, and you may find it in places you didn't expect. Maybe you don't believe that your superpower needs to involve that being resident inside your own team. Then go and find the right partner that can bring it to you in a true partnership form. And if you can't figure either of those things out, have the courage to step aside, because someone in your organization likely does and is just waiting for that opportunity.
Awesome. That wraps up today's discussion. I'm gutted. I feel like we could talk about this for hours and hours. Thank you so much to all of you for taking the time to join me and share your brains. Where can people find out more about you and kind of what you're working on, Rohit?
Bridgemarketplace.com or Mathur at bridgemarketplace.com. You can also find me on LinkedIn. Keen to connect. And obviously, you can always reach out to Kate, who will give you my email address.
Absolutely. Barb, what about you?
Well, you can find Coastal Community Bank at coastalbank.com. You can find me hanging out on Sundays on LinkedIn, probably talking about the confluence of music and fintech. And I pretend that I'm on Mastodon. Can some more folks come join me there? Because I'm really still missing my own digital community. Come find me.
Jason, you're Mastodon?
I'm not, actually. You can find me at 11fs.com, obviously, or on LinkedIn.
Brilliant. And as for me, you can find me on LinkedIn, Kate Moody or kate@11fs.com. Thank you so much for listening. If you like what you've heard, follow our podcast and don't forget to leave us a review. It helps us to make it better and helps others to find this show. As always, if you want to join the conversation, find us on social media. I don't think Mastodon, sadly. I'll look into it for you, Bob. Just search for 11fs or Fintech Insider or email podcasts@11fs.com. Thanks very much. Goodbye.